Hello guys, I'm so happy to be with you tonight in this to be representing this assignment. So this is me in this picture and my wife Patricia and our first daughter Eliza and our son Neil Foster and the youngest one Neila Patricia. So actually the number we need to I have to work on tonight is the number 23 in the chapter 4, but I cannot find this chapter. So I think maybe, I don't know, maybe the assignment we should have maybe 2 and 3. So I will present you the number 2 and 3 since I cannot find the number 23 in the chapter 4. So let's start with number 2. So here we have the questions is identify the accounting concept that describes each situation below. Do not use any concept more than one. So we have here 8 questions and we have 10 answers. So we need to be careful and try to choose the correct one. So we go for the first one. This is the rationale for why planned assets are not reported as liquidation value. And it precise here, do not use this historical cost principle. So for this one, we use going concern assumption. The second one is indicates the personal and business record keeping should be separate maintained. So for this one, it is economic entity assumption. For the C, ensure that all relevant financial information is reported. So this one is full disclosure principle. D, assumes that the dollar is the measuring stick used to report on financial performance. So this one I choose monetary unit assumption. E, requires that accounting standards be followed for all items on significant size. So for this one I use materiality. F, separates financial information into time periods of reporting purpose. This one I use periodicity assumption. For the G, requires recognition of expenses and in the same period as related revenues. For this one I choose expense recognition principle. And finally the last one is indicates that fair value change subsequent to purchase are not recorded in the account. For this one I need this historical cost principle. So as you can remind you about that at the beginning of this course, I think maybe in the chapter 2 we learn about these things about accounting. So about these concepts, accounting concepts. So we learn when to use going concept, for example, when the asset is rational, and also remember about the full disclosure principle when the relevant financial is relevant, and also remember when we study about the when they talk about the time period when we enter some financial during a certain period of time, and what we use for that. So now let's go to the other one. I think the 3. So this one I tried, but it seems that I missed one part, but I understand, but I'm pretty sure this one was the correct one, but unfortunately it is not correct one. So if some of you know about the good answer, please let me know, and please let us know all the group know about that. So now we're pretty sure this one was the correct one, and unfortunately I tried 3 times and it doesn't work. For this one, they said Cortina Company accumulates the following adjustment that are at December 31. Indicate first the type of adjustment, prepaid expense, accrued revenue, and so on. And second, the status of the account before adjustment, overstated and understated. A, supplies of 400 are on hand. Supplies account shows 1,600 balance. So for this one, it seems to have on hand 400. For this one, this is a prepaid expense. Pardon. So a prepaid expense is something that you paid in advance. So you give the money and you continue to receive the service or the materials just after. In the second one, this part one, the supplies account shows 1,060 and balance is an asset overstated. For the B, services performed but unbilled total 700. So this one is a service we provide as a company. So the company provide a service. But when we unbill, that means that we do not submit our facture or the receipt yet to receive the payment. So this is accrual revenue. So this is a service we perform but do not receive yet the money, but we consider that as a revenue. So even though we don't have the money on hand, but we expect to get it because we already provide the service. And before adjustment, account before adjustment is asset understated, revenues understated. For the C, interest of 300 as accumulated on the note payable. So this is an interest. So these are accrued expenses, and this is what they are. And for the other part, before adjustment, I thought the good answer was liabilities or understated, but this one is not the correct one. So I'm sorry for that. So if any of you know about that, please you can share with us with all the group. And the last one is when collected in advance totaling 1,100 has been earned. So this is a word collected in advance for $1,100. So for this one, this is an unearned revenue. As you could see, they collect the word in advance is something they collect just in advance, and the account before adjustment is liabilities overstated and revenue understated. So guys, this is all we have for tonight. You know, I am struggling with the technology to try to get everything done perfectly, but you know, I am trying, and I hope I will do better in the future. So I will be so glad to receive your answer on the post. So talk soon. Thank you.